Good afternoon, everyone. We are Team Tycoons and we're here to present our analysis on DNL Industries. DNL Industries is a Filipino holding company which owns four main subsidiaries that specializes in innovation and customization. First is the OFI for their specialty food ingredients segment. Second is the FIC and DLPC for their plastic additives and colorants. Third is the Chemers Technologies for their OU chemicals. And lastly, Airpack for the aerosols. Through our evaluation, we arrived with a buy recommendation with a target price of 13 pesos and 72 centavos, offering at an upside of 32% from its closing price of 10 pesos and 40 centavos last November 23, 2018. Our valuation is strongly grounded on the following key pillars. First is DNL's high growth potential in its underlying market. Second is DNL's strong competitive position. And lastly, DNL's strong financial position.
Through our analysis, we found that DNL will benefit from the higher growth in the Philippine economy as more demands from current and emerging markets accelerate. With an optimistic outlook for GDP in the coming years due to external factors such as the remittances received by the Filipino households and countries' established policies and favorable global economic fundamentals, the demand for high-margin specialty products in DNL's underlying markets continue to grow. With DNL's plans in increasing its HMSP volumes, its profit margins are expected to expand further.
Also, DNL's partnership with international companies such as Ventura and Bungi as suppliers for their high-margin specialty products as well as their commodity products will then be supported with a Philippine Export Development Plan that seeks to boost growth in export services, increase competitiveness of Philippine exports, and explore new markets for Philippine products. Additionally, there has been an increased preference for green substitutes. As consumers become more aware of eco-friendly products, oleochemicals, in which DNL is significantly involved with, has the potential to replace a large portion of the petrochemicals.
The global oleochemicals market was valued at $18.6 billion in 2016, is expected to reach $26.8 billion in 2022, and is expected to grow at a compounded annual growth rate of 6.3% between 2017 and 2022. Lastly, with the Filipino household spending 41.5% of their expenditures on food, food service companies in the Philippines are poised to potentially shift from imports to local suppliers to save significantly on cost, which entails revenue opportunities for DNL.
DNL sustains a strong competitive positioning in every industry it serves, mainly due to its experience and expertise. DNL is a research and technology-driven organization which allows them to deliver the needs of their customers for highly customized and specialized products. These products proved to be attractive to DNL's customers, evidenced by the HMSPs accounting for 58% of DNL's revenues in 2017, as well as DNL's long-lasting customer relationship. DNL's focus on specialty products and their continued investments on R&D affirm our expectations that HMSPs will boost growth in sales.
DNL's plans on expansion, investment in PEZA facilities position them to cater to the growing demand, both local and foreign. The development is expected to triple its current capacity and in turn help company to provide through the increasing growth of the export business, which contributed 25% to total export sales in 2017. All this reflects the excellent management decisions taken during the last few years by their board of directors as well as their senior managers, and the inclusion of their independent directors, which exhibits that the Lao family is not monopolizing on the BOD positions, hence protecting the shareholders from any anomalies. This allowed DNL to hold more than 50% of the market share in every industry that they serve.
Historically, DNL's revenue growth has been constantly increasing, each time performing better than its previous years. It is forecasted that for the next 5 years, DNL subsidiaries would continue this trend. This is highly attributable to their PEZA investment, robust export market, and margin expansion. As DNL reaps their investments in PEZA, their net margins and earnings before interest margins will be well above 10%. It is also crucial to look at DNL's R&D investments since DNL is a highly research-intensive organization. DNL's increasing return on research capital highlights that DNL is on the right track in terms with their investments in R&D and product innovation. This has been one of DNL's competitive advantages as they aim to maintain product innovation through continuous innovation.
In terms of DNL's operational effectiveness, its ROIC is 12% higher than its WACC, proving how efficient DNL is in generating returns to the owners of the capital. The rise on DNL's return on equity hints that the stockholders will benefit from the firm's improved profit performance, as they would also be receiving increasing portions of earnings through their investments in the company. So Jen, how leveraged is DNL?
Well, Jesse, in terms of liquidity and leverage, DNL got it covered. DNL's low leverage ratio provides it with ease of coverage whenever it needs more cash to fund its current operations. With an operating cash flow of at least $2 billion from 2018 to 2023, it is forecasted that DNL has financial flexibility to pursue other investment. DNL's highly promising revenue growth, cash flow operations, and operational effectiveness proves that DNL has a strong financial position and an efficient cash flow generation.
Great. After discussing the investment highlights, we now proceed to our valuation, which is mainly backed by a discounted cash flow model applied to each business segment of DNL. To start, we computed the cost of equity per segment using the capital asset pricing model. Next, we computed for the levered beta and the debt to equity ratios for each segment, and taking these with their following cost of debt, we get the following WACC figures. Adding up the intrinsic prices from each business segment, namely the food ingredients segment, the oleochemical segment, the specialty plastic segment, and the aerosol segment, we get a total price of 13 pesos and 72 centavos with an upside of 32%. To support our valuation, we conducted a multiples analysis of DNL's local and foreign peers. Taking the peer average PE ratio, as DNL's should be PE ratio, we get an undervalued share price of 11 pesos and 48 centavos, which also signals a buy. Lastly, we ran a Monte Carlo simulation with the variables sales growth rates, cost of goods sold, and other operating expenses being varied. Out of 1 million trials, we found a 65% probability of a buy. These results not only strengthen our confidence in our valuation, but also ultimately in our buy recommendation.
Now, to complete our analysis, we have identified risks based on their likelihood and impact and tries to understand how the company mitigates them. So first is when there is a drop in the GDP growth. So this entails a downward shift in the consumer commodity spending. Therefore, for DNL, lower commodity sales, especially here in the Philippines. However, to offset any of these losses, DNL has shifted towards their high-margin products. Second is the volatility of the raw materials prices. 86% of DNL's total cost is accounted for this. Therefore, to combat this, DNL has pass-through pricing agreements with their customers to ensure that any changes in the raw materials prices will be reflected on their selling price. And lastly, DNL is subjected to foreign exchange risk given that their goal is to increase their export sales to a total of 50% of their total sales. Therefore, any fluctuations in the Philippine peso will surely affect DNL's export sales. However, as previously mentioned, DNL has pass-through pricing agreements to reflect any of these changes. So in summary, the team believes that DNL is strongly grounded on their high growth potential market, strong competitive position, and strong financial position. With our valuation of 13 pesos and 72 centavos offering at an upside of 32%, we are confident with our buy rating. So investors, be one of the leading innovator together with DNL. Thank you very much. We're now ready for your questions.
Thank you very much, Team Tycoons. Panel of judges, floor is yours.